Hello and welcome to India Business Hour. I'm Shireen Bhan. The big stories that we're tracking for you tonight. The sensex and the nifty down for the fifth straight day as stock markets remain subdued ahead of the election results. This is the longest losing streak we've seen in the last 7 months. Finance Minister Nirmala Sitharaman says there will be a solid bull market after the election outcome. Reserve Bank's balance sheet grows 11% in FY24. The central bank's income increases 17%. Expenses drop 57%, paving the way for that bumper dividend of 2 lakh crore rupees to the government. The volume of bank frauds rise nearly threefold in FY24, but the amount involved in the frauds declines by 47%. Private sector banks report the maximum number of frauds in the last 3 years. The monsoon arrives in Kerala 24 hours earlier than expected, but the heat wave continues to scorch North India's temperatures near 50 degrees across most parts. The insurance regulator proposes a new framework for surrender value. Sources tell CNBC TV18 the regulator may require insurers to pay higher guaranteed value if policies are voluntarily terminated. Insurance stocks slide in trade. 40 days after polling began, the loudspeakers have gone silent. Campaigning for the final phase has drawn to a close. 57 constituencies across 8 states will vote on the 1st of June. Results will be declared on the 4th of June. Israel claims to have killed 300 Palestinian gunmen as it intensifies the operation in Rafah. Hamas claims 37 civilians were killed in the last 24 hours. Israel's military also seizes control of Gaza's border with Egypt. Space startup Agnikul Cosmos makes history, launches the world's first rocket with a single-piece 3D printed engine. Co-founder Srinath Ravichandran tells CNBC TV18 an orbital flight will happen in the next 6 to 9 months. Move away from tokenism, says Major Radhika Sen, as the United Nations honours her with the Military Gender Advocate of the Year. She speaks to CNBC TV18 about working in conflict zones and leaving IIT Bombay to join the Indian Army. Also on the show, luxury apartment market booms in India as buyers anticipate better investment returns. The investor community and NRIs show huge interest as the return on some properties as high as 30% in just a few years. Well, as always, let's start with the market action. The sensex and the nifty declining for the fifth straight session today, marking the longest losing streak that we've seen for our markets in the last 7 months. Now, the sensex lost about 600 points, the nifty down 200. The nifty bank closing in positive territory. That's the S&P impact there. And the mid-cap index was down by about 700 points as well. So the markets are seeing sharp cuts across the board today, with the exception of financials. Finance Minister Nirmala Sitharaman, though, is upbeat about the BJP's victory come the 4th of June. Speaking to News 18, the Finance Minister said there will be, and I quote, a solid bull market after the election outcome. She's termed S&P upgrading its outlook on India as a good omen.
Undoubtedly, it's a big good omen, and big good omen for Prime Minister, for the country, for the economy. The consistent emphasis of the Prime Minister that we should spend money in building infrastructure, putting more money for that, and ensuring quality expenditure happens. You've given money and you don't care how it is getting completed. So it has so many different governance message. And these are not my explanations. S&P themselves have said as a justification to why they have changed the grade, and also have shown that in the next 24 months, every chance of us being given a better grade. Probability of, volatility is very high when there is no single majority government in place. Indian people have been in the last 2 elections giving that single majority for Prime Minister Modi, and as a result, a stable government has been in place, which gives predictable policies, predictable and consistent tax framework. All these matter to the stock markets. So if there is going to be, and there will be, that's my confidence, a good result coming for BJP on the 4th, it indicates stability, people standing by a good majority infused government, and that will mean good message for the stock market, and therefore it can really go up. It will be a solid bulls market then.
Well, that's the Finance Minister reiterating the message that several senior ministers have made, that the bull market in India will continue if the BJP were voted back to power. Now, the Reserve Bank of India has released its annual report for FY24, showing a balance sheet growth of 11%. The RBI has seen its income grow 17%, expenses fall 57%, and this has paved the way for that bumper dividend of 2.1 lakh crore rupees to the government. The annual report also shows a rise in the volume of bank frauds, but there's a drop in the amount of money involved in the frauds. Ritu standing by with the highlights of the RBI's annual report. Ritu.
Well, first, on that bumper surplus coming in from RBI, and we now know how it was able to transfer this bonanza from its balance sheet. Now, surplus is essentially the total income minus the total expenditure. And for FY24, RBI saw a steep 56.3% fall in its expenditures, along with a 17% increase in income. The income rose on the back of a huge 129% increase in interest earned on foreign deposits and a near 50% jump in the interest that it earned on foreign securities. Expenditure, on the other hand, fell largely because of that 67% fall in provisions because of lower provisions on forex assets, leaving RBI with a neat 2.1 trillion rupee surplus. Now, the RBI annual report also points to a brightening outlook for the economy on the back of solid investment growth, and it expects a 7% GDP growth for FY25. It points out that inflationary pressures are abating, but food prices remain vulnerable to shocks, warning of risks to both growth and inflation from geopolitical tensions, fragmentation, financial market volatility, erratic weather developments, and so on. Now, among other interesting findings from the annual report, RBI said bank frauds fell nearly by half in value terms, but tripled when it comes to volumes in FY24. More than 36,000 frauds were reported in the year, involving almost 14,000 crore rupees. Private banks reported the most number of frauds in the last 3 years, while public banks contributed to the maximum fraud amount. The highest number of frauds was seen in digital payments, where more than 80% of the frauds came from the cards and internet banking. But that is not to say all of these frauds occurred in FY24 itself, with RBI pointing to the fact that a significant time lag exists between the date of occurrence of a fraud and its detection.
Ritu, many thanks for joining us. Staying with the RBI, the government bond buyback offer seen a tepid response. Once again, the government had offered to buy back bonds worth 40,000 crores, of which it bought bonds worth only over 5,000 crore rupees. Buybacks are one way for the government to reduce its liabilities and strengthen its fiscal position by repurchasing its own outstanding bonds from the market before they mature. There's excess liquidity with the government when spending is constrained due to elections. This is the fourth round of buybacks by the RBI this month. The last three buybacks have seen poor response. The first buyback of 40,000 crores on the 9th of May saw a buyback of only 10,500 crores. The second round for 60,000 crores saw a buyback of only 2,000 crores. And the third round of another 60,000 crores saw a buyback of only 5,260 crores. So along expected lines, tepid response to the fourth offer. Shares of Edelweiss Financial Services tanking over 10% in trade. This after the Reserve Bank imposed business restrictions on two Edelweiss Group entities. The company has responded to the RBI's action, saying it will take necessary remedial steps immediately, adding that the RBI's action will not have any material impact on the company's resolution and recovery efforts. The markets, of course, did not like what they heard. Tata Steel, the top loser on the Nifty today. The company reported a strong set of numbers for Q4. And for the full year, it reported a net loss of more than 4,900 crore rupees. The company's CEO, TV Narendran, said that the UK operations will continue to struggle due to wind-down costs in the first half of this fiscal year, adding that the European business had suffered an EBITDA loss of $70 a ton. Take a look.
In terms of UK, we had a one-off, which was roughly about £50 million, which was more an adjustment on the carbon credits that we have and the set-offs that we need to do, and the hedges that we have, etc. So that 50 million will not be there for this quarter, which was there for Q4. And but going forward, in UK, we expect Q1 and Q2 to continue to be tough because of the fact that we are winding down our operations. We have the coke ovens already closed in March. We'll close one blast furnace in June, and we'll close the second blast furnace in September. But we expect the second half of the year to be positive EBITDA in UK as well.
Tata Steel's TV Narendran there on the challenges that they continue to face as far as their European business is concerned. Southwest monsoon arrived in Kerala a day ahead of the Met Department's forecast. Several districts in Kerala have seen heavy rainfall. The Met has issued an orange alert in 3 districts. In what is a rare phenomena, the monsoon arrived in the northeast of India as well. Meghalaya's Cherrapunji seeing heavy rains, waterlogging and gusty winds. Significant rainfall being recorded in Assam, Silchar and Haflong as well. While the rains have brought in respite in Kerala, North India continues to sizzle with temperatures hovering near the 50 degrees Celsius mark. Now, the Met Department has clarified that reports of record-breaking temperatures of over 52 degrees Celsius recorded in Delhi's Mungeshpur yesterday may have been a sensor error, adding that the maximum temperatures across Delhi NCR range between 45 and 49 degrees Celsius. Meanwhile, the government is monitoring the impact of the heat wave on vegetable crops. Abhimanyu standing by with the details. Cause for concern, Abhimanyu?
Government sources have indicated that the heat wave has impacted the yield of green leafy vegetables. However, rains in the eastern part of India may increase cultivation, particularly of pulses. The government is expecting better price realization for farmers of pulses in several states like Gujarat, Madhya Pradesh, Uttar Pradesh and Karnataka. The government has also indicated that the mandis currently are sluggish due to lack of a festive season as well as lack of conspicuous consumption and lesser people coming out due to the heat waves. However, with IMD forecasting a good monsoon this year, tur and urad prices are expected to cool down with better availability. That's the hope which has been expressed by the government so far, even as a regular examination of all stock limits disclosures is being undertaken by the government to ensure that there's no hoarding and ample supply is maintained in the market to maintain price stability. Now, heat waves in northwestern India are expected to reduce from today with the onset of western disturbances and thunderstorms, whereas the onset of monsoon in Delhi is expected to be around the 29th of June, and an above normal monsoon is expected for the entire country.
Abhi, many thanks for joining us. With temperatures soaring across the country, peak power demand has hit a new high as more people turned on air conditioning expectedly. India recording a peak power demand of 246 gigawatts on Wednesday, beating the previous high of 242 gigawatts recorded in September of 2023. Several states, including UP, Maharashtra and Gujarat, have recorded their highest power demand. Delhi has been breaking new records every day for the last fortnight amid severe heatwave conditions. Peak demand was at 8 gigawatts yesterday. Niti Aayog member V.K. Saraswat says Indian industry dependent on fossil fuels need to create a carbon capture mechanism. Speak to CNBC TV 18. Saraswat said industries like cement, steel and aluminum cannot function without coal or gas-based power. He's called on these industries to capture the carbon dioxide from the industrial process and store it underground. Saraswat says carbon capture is crucial for India to combat rising temperatures. Take a look.
The only method of decarbonization of the present state of the energy production devices is to integrate all of them with carbon capture, utilization and storage. If we do that, that should be done at the fastest pace rather than waiting for augmentation of the renewable energy, augmentation of the other sources. Industrial sector, use like cement, steel, aluminium and all of them, refineries, all of them cannot live without the coal-based power or the gas-based power. So what is the answer? Integrate all of them. They are difficult to abate sectors. Integrate all of them with CCUS.
That's Niti Aayog member on the need for Indian industry to adopt to climate mitigating strategies. Insurance regulators proposed a new framework for surrender value. Sources tell CNBC TV 18 the regulator may require insurers to pay higher guaranteed value if policies are voluntarily terminated. Insurance stocks declined in trade today. Yash is standing by with the details. Yash, what is now being considered and what could the impact be?
Well, it was only after the meeting which the IRDAI chairperson had with life insurance CEOs where he emphasized on the fact that insurance companies need to look at raising the special surrender value, which eventually will end up increasing the total surrender value paid by these life insurance companies to policy holders. CNBC TV 18 had even reported this particular development. Now, in a fresh set of move which has come from the regulator's side, IRDAI has sent a draft proposal to various life insurance companies This essentially is how the regulator wants to see an increase in the special surrender value. Now, if I just talk about the words which the regulator has used in its draft paper, the regulator says that insurers have to ensure that special surrender value is at least equal to the expected present value of paid up sum assured and paid up future benefits. Also, what the regulator has said is that the interest rate which will be used in calculation of the special surrender value has to be done on basis of the 10-year GSEC yield. Now, just to explain these two lines with numbers, if I give you an example with a policy of having a sum assured of about 1 lakh with about a 50,000 rupees bonus, the tenure of the policy being about 10 years, which means annual premium being about 10,000 rupees, and the GSEC yield at about 7%, then in that case, as far as the paid up sum assured is concerned, if you put all these values in the formula which has been given by the insurance regulator, then you will get the paid up sum assured to be at around 15,000 rupees. Use this to derive the future benefits, the paid up future benefits. Then in that case, if you put all the values in the formula, then you'll get a special surrender value of 8,159 rupees on a premium of 10,000 rupees which has been paid by the policy holder. Now, the December proposal which had come out, which spooked various life insurance companies, that had suggested surrender value to be about 83% of the premium received by the life insurance companies. Of course, it wasn't liked by these life insurance companies. There was a lot of resistance, after which the March set of regulations mellowed that down, brought it down to about 30% from 83%. But this fresh circular again talks about taking it all the way to about 82%. There is, of course, a lot of resistance from life insurance companies on this fresh proposal.
Yes, we saw that play itself out in December of 2023, and it looks like it is going to continue to be stormy. And speaking of the insurance sector, companies have approached the GST Council to seek a lower tax rate on insurance products. Sources tell us that companies have proposed to lower the tax rate on life insurance products from 18% to 12%. Of course, the GST Council will consider this issue as and when it decides to meet, and it is taking up proposals. The Delhi High Court has granted some relief to Elon Musk's Tesla in a trademark dispute with Gurugram-based Tesla Power. Now, the court has said that the Indian company will not make, sell or market electric vehicles. Tesla Power also informed the court that all of its vendors have been instructed to remove Tesla Power from e-scooters, adding that the sale of e-scooters was only a marketing tie-up with another manufacturer. The court will hear the matter on the 3rd of July. Well, space startup Agnikul Cosmos has made history today. It has launched the world's first rocket with a single-piece 3D printed engine. Co-founder Srinath Ravichandran tells CNBC TV 18 that an orbital flight will happen in the next 6 to 9 months. Take a look.
Making rocket engines quickly is one of the key factors in making launches, more frequent. If you look at what makes launches, come at a certain slow frequency today, the biggest contributor to that is the time it takes to make a rocket engine. In our single-piece engine, we are able to get an entire engine done in 72 hours. Because the entire engine is 3D printed in one shot, there is no human interference in the process. And so since we are able, and we do this in our own rocket factory, there's a lot of end-to-end control in how we are able to get this out quickly. So being able to make rockets quickly and being able to launch them from any authorized launch pad, I think these are things that are going to make space accessible to everyone.
All right, you can catch that full interview with Srinath Ravichandran of Agnikul Cosmos and Pavan Goenka, chairman of InSpace. That's coming up for you 9:30 p.m. right here on CNBC TV 18, a special edition of Young Turks. Up next on India Business Hour, Major Radhika Sen honoured with the Military Gender Advocate of the Year by the United Nations. We speak with her when we return. Catch all of CNBC TV 18's news and updates on Facebook, X, Threads, Instagram and JioCinema. Well, the stage is set for the final act of the Lok Sabha 2024 polling season. Campaigning for the last phase coming to an end. 57 seats across 8 states will vote on the 1st of June, bringing the curtains down on a 44-day polling season amidst scorching summer. 13 seats in UP spread across 11 districts, including Varanasi, go to the polls. Prime Minister Modi is also the sitting MP from the Temple Town. He won the seat with a vote share of 63% in 2019. Prime Minister reached Tamil Nadu's Kanyakumari earlier this evening. He will be meditating at the Vivekananda Rock Memorial till Saturday afternoon. The Congress has moved the Election Commission, calling the Prime Minister's meditation a violation of the Code of Conduct. Voting will take place for all 13 seats in Punjab, which is poised for a four-way contest between the Congress, the Aam Aadmi Party, the BJP and the Shiromani Akali Dal. In West Bengal, voting will take place for 9 seats, including the high-profile seats in Kolkata. TMC won all of these seats in the last Lok Sabha elections. All 4 seats in Himachal go to the polls as well. The key contest to watch out for will be the one between actor Kangana Ranaut, who joined the BJP ahead of the elections, and Congress's Vikramaditya Singh. A trial court in Delhi has agreed to hear Delhi Chief Minister Arvind Kejriwal's bail plea on the 1st of June. The court has issued notice to the Enforcement Directorate seeking a response in 2 days. Kejriwal moved the court with 2 applications, one for bail and another for a 7-day extension of his interim bail on medical grounds. Earlier, the Supreme Court refused to list Kejriwal's plea to extend the interim bail plea. Kejriwal was granted an interim bail in the liquor policy case till the 1st of June to campaign for the Lok Sabha polls. Once a niche market for the ultra-wealthy, luxury homes are now a hot ticket item in India's real estate market, driving impressive growth. Several reports suggest a positive outlook for the luxury home market, and Delhi NCR is taking a lead in the segment, with several high-end projects getting sold out within days of their launch. Shivani Bazar's reports on what's fueling the luxury home market boom.
Well, in a country known for its diverse housing market, there is a new trend making waves. Luxury homes. Once reserved for the ultra-wealthy, these high-end properties are now at the forefront of the real estate boom, capturing the attention of affluent buyers and savvy investors alike. With luxury apartment sales skyrocketing and prices appreciating at an unprecedented rate, the landscape of Indian real estate is undergoing a dramatic transformation. From the bustling streets of Delhi to the upscale neighborhoods of Gurugram, many factors are driving the surge in the high-end homes. The real estate sector is sharpening its focus on luxury housing, and here's why. In just the first 3 months of 2024, 11% of housing sales have come from luxury apartments priced rupees 3 crores and more. This is more than double the number for the same period last year, when luxury housing contributed 5% of the total housing sales. The highest demand for luxury housing is coming from NCR, especially Gurugram. 44% of apartment sales in NCR in Q1 of 2024 came from the luxury segment. The investor community and NRIs are the biggest buyers of luxury housing, and this is one of the biggest factors driving the demand.
If you look at the uber rich, the HNIs, the ultra HNIs in India, they have a requirement for lifestyle products, and developers have catered to the lifestyle requirement by almost bringing in a 5-star hotel to your home. So investors have been very key contributors to this success, because now they see very, very good capital appreciation. Year-on-year appreciation is somewhere around 25-30% if you look at the last 2 years. So we have a lot of investors making a beeline for luxury real estate in India. Secondly, we have a lot of NRI customers. And lastly, like I said, it's a new age buyers who also contributed to the demand.
And the numbers speak for themselves. DLF recently sold 800 apartments worth rupees 5,500 crore rupees in just a few days post-launch. In 2023, DLF Camellias in Gurugram sold an apartment for 100 crore rupees and is now planning another ultra-luxury project called the Camellias 2. Luxury projects by real estate company Anant Raj in Gurugram was also sold out within days. Another developer, M3M Group, also launched a 350 apartment luxury project projected to generate a revenue of 4,000 crore for the company.
The architect that we've chosen to do this product is UHA London. We have apartment ranging from about 3,800 square feet going up to about 8,000 square feet, which are, the pen suites, single level simplex pen suites. We have a club here, which is about a 2 lakh square feet club. In terms of amenities, what a resident of altitude would get to would be close to about 200 odd amenities.
A report by Anarock Group reveals that luxury homes priced over 1.5 crore rupees made up to 21% of all residential units sold in top 7 cities in Q1 of 2024. That's a big jump from 7% in 2019. Luxury apartment sales have even surpassed those in the affordable housing segment, which has seen a drop in sales to 18% from 37% in the past 5 years. The luxury real estate market in India is anticipated to maintain its momentum in 2024 with a growth of at least 5 to 10%. Major developers across the country such as the Lodha Group, the DLF Group, Godrej Properties and Prestige Estates are increasing their activity and planning to launch new units in the luxury segment. The strategy is clear. Real estate developers want to leverage the strong demand for luxury and premium homes, which gives them highest profit margin. In New Delhi, this is Shivani Bazaz.
Well, luxury real estate having a moment there. It is a moment of great pride for India as an Indian Army officer, Major Radhika Sen, has won the United Nations prestigious Military Gender Advocate of the Year award. She served as a peacekeeper with the UN mission in Democratic Republic of Congo and helped foster a safe space for women and children in the conflict zone. Major Sen is the second Indian peacekeeper to receive this award, following Major Suman Gavani, who was honoured in 2019 for her service with the UN mission in South Sudan. In a conversation with CNBC TV 18, Major Sen said that working with women in Congo has been a life-changing experience for her. Speaking about joining the Indian Army, she revealed that she was living her dream in IIT Bombay before she made it to the Army shortlist.
It is not just me and my team who has made an effort to bring a change. It was an effort which is made by each and every peacekeeper all around the world who are working in those challenging conditions. And I'm representing all of them, because I know work is being done by each and every one, and I've just been lucky that I'm standing here representing my country and my colleagues. So yes, it means a lot because it talks about the work done by everyone. Ever since I was a small child, I always wanted to go to IIT, that to IIT Bombay, and I was living my dream. But when this came and I got selected my name came up in the merit list for the Indian Army. It was my parents and my family's motivation who really wanted me to do that. And I'm doing something this great, not just for the country, but for the humanity as a whole.
Well, congratulations there to Major Radhika Sen. And speaking of women power, CNBC TV 18's future female forward will be in Bengaluru tomorrow. We'll be speaking with women business leaders, police officers, sports personalities at India's IT capital on breaking barriers and bridging the gender gap. You can catch our special coverage starting 6 p.m. right here on CNBC TV 18. So stay tuned to CNBC TV 18. It is a wrap on India Business Hour. But before we go, here's a quick note. A daily wrap of the top headlines will hit your inbox every day before you call it a night. CNBC TV 18's daily newsletter, Top 10 at 10 on LinkedIn, featuring the top 10 stories on the markets, corporate updates, economic insights, and financial highlights. Subscribe now and get the CNBC TV 18 edge. The news will continue after the short break. From all of us here, goodbye. Thanks for watching.